Welcome back to the Brian Crombie Radio Hour, Saga 960. We're chatting tonight with Mark Borkowski, who is the president and CEO of Mercantile M&A, Mergers and Acquisitions, a mid-market M&A firm here in Toronto. And Mark, I understand that we've now got a second real estate development company in China that's in trouble.
Second largest real estate developer, Shimeo Corporation, defaulted on their bonds last night. Fitch, we expect that Fitch will be declaring them as in default. If we combine Evergrande and Shimeo together, it would be equivalent to the size of 4 Lehman failures, possibly 5. This is world-shattering. Why is nobody noticing? The financial markets aren't noticing. The Chinese government is not prepared to step in. They've sent in advisors. They've denied the fact that they will be making any investment or providing any funds. We wait and see.
And so we were talking about how sizable Evergrande is. How sizable is the second largest one?
Probably about 220 billion. So Evergrande's initial debt is 300 billion. Shimeo are at around 200 to 220 billion, plus more, but that's declared. So we're looking at in excess of $500 billion of default.
And what you were saying is that if one or two go, the rest have got to have challenges themselves, and frankly, just them defaulting is going to have impact on the property market, which is going to, trigger a far larger catastrophic impact by itself.
Absolutely. The chairman of Evergrande yesterday said there's going to be no fire sale on the real estate properties, but that is just smoke and mirrors. There will be all kinds of groups coming in. What is taking place at the moment is that the distress funds that buy distressed bonds, and they're able to buy them now at a great discount. Goldman Sachs is in there buying up all these bonds in anticipation that these real estate properties will come available and will be bought at some fire sale price.
So why do you think the financial markets aren't paying more attention?
We can't understand it. I mean, I'm speaking with colleagues in New York, in Zurich, on Bay Street, and they're saying we're noticing. The markets aren't. I mean, the investors are. The institutional investors are taking note. They're on the line. The Chinese investors got out. The smart money, as we would refer to it, got out in the spring. When Evergrande had indicators that they were going to default, the smart money, which were the Chinese banks, the institutions, they all got out. So there's a small component of Chinese investors currently sitting there. And most of them are people who bought condominiums and have deposits outstanding. The vast majority of the bonds and the debt is being held by American, European, and some Canadian pension funds. We're going to feel it.
Is this because we feel insulated in Canada or the United States from what goes on in China and Chinese real estate?
I think it's because we get very little disclosure from Chinese companies. I mean, the Chinese government disclosed very little. Evergrande is reporting a limited amount of information. The bondholders at the moment are having great difficulty getting any information. So we're kind of like waiting for something to happen.
Is it because, this can't be as big as COVID and this variant that seems to be accelerating dramatically and doubling its infections every 3 days? Maybe that's what people are worried about and concerned about. Or maybe we're all just sort of, we're overexposed. We're over-impacted. We're hearing so much negative news. We got COVID-19, and then we got variants, and then we got mental health issues, and then we got climate change, and then we got January 6th and people being charged criminally because they're not disclosing stuff. And we're overwhelmed by how much stuff is going on, and a Chinese real estate development company can't trigger a worldwide financial collapse because it's just so meaningless, isn't it?
It's meaningless, but the numbers are astounding. We're looking at the moment, reported of more than $500 billion of bad debt. And most of that bad debt is going to be held by institutions that manage our pension funds and insurance funds. There's a calamity coming.
There's a calamity coming. So, Mark, what are you telling people? What do you do?
I mean, there's nothing we need to tell people. We can't get proper information. All we're getting is Bloomberg reports, and they're getting it secondhand. So sit and wait. I'm not sure that there's more we can do.
Should we be shorting the Chinese market? Can we short these Evergrande stocks?
There's a lot of shorts in the market. Personally, I'm staying away from this one. And I would recommend to all of your listeners, they do the same. Let nature take its course at the moment.
So when you had the subprime crisis in the United States, lots of people thought that this negative real estate impact would go around the world, and it went a lot around the world. You had huge depreciation in prices in the United States. You had depreciation in prices in major metropolitan markets in Europe and elsewhere, and debt obviously that went into default everywhere else. But the Canadian market was insulated. The Canadian banks were well capitalized. The Canadian banks didn't seem to have a big impact, and Canadian real estate, didn't suffer a decline at all. And you take a look at the statistics, you've probably seen it. Canadian real estate prices to incomes and real estate prices to rents are at where the U.S. was in 2007 before the crisis.
In the subprime era, Canadian banks were not as invested as the Americans were. Their products were not sold in Canada as actively. So we were insulated. We were lucky. We missed the bullet.
And are you saying we're not as insulated this time?
Not this time. Canada pension plan.
Because the CPP has invested so much in the Chinese real estate development companies.
Exactly correct. And in various infrastructure projects in China. So all of these investors that were offered great interest rates and great opportunity in China took them. A lot of Canadians did so, and we're going to be exposed this time.
Is there a commentator that you follow most closely about this?
They're mostly out of Hong Kong at the moment, and the most logical and probably the best spokesperson or spokespeople are the people from Bloomberg. They seem to have the best insight, so they're issuing press releases and notices probably every few hours. So something's going on. But we just can't get to the bottom of it at the moment.
So if you had to sort of think about the things that worry you about the marketplace right now, obviously Evergrande and other Chinese real estate development companies are at the top of the list. What else is concerning you about the economy? Are you concerned about COVID and variants?
Absolutely. We're concerned as Canadians about the Canadian debt load. They reported the budget deficit yesterday. And I mean, it wasn't exactly as they had reported. It's about $7 billion less, but it's very, very substantial debt. New infrastructure projects can't be developed in Canada as long as we have such a heavy debt load.
And Ontario spending a lot of that, the benefit of the increased tax revenue on additional expenditures. Does that concern you, or do you think it's justified because of the continued impact of COVID and maybe even worse?
They announced a $40 billion payment to Indigenous children. $40 billion payment for Indigenous children. I mean, that's another big block of tax revenue. That's 1/3 of the deficit going forward, just to Indigenous children. All of these projects are being postponed. Yesterday it was reported that the development of all the forests, planting 1 billion trees, were sort of like 1/10 of the way there. All the promises made haven't materialized. So all these infrastructure projects that have been on the books for 2 and 3 years have been postponed or kicked down the road.
Okay, so Chinese real estate, COVID and its variants, debt,
high debt load.
Those are 3. What's your 4th and 5th?
4th and 5th, I guess, is personal credit. I mean, people are in deep debt. As we talk to colleagues, people's credit cards, the credit card companies have record insolvencies going on. The insolvency community, of course, are not doing corporate insolvencies at the moment because the government called all the bank presidents to Ottawa in the spring and said, it's COVID, back off, give all your borrowers some time to arrange other facilities or work with them till the end of the year. Well, we're at the end of the year. The banks are now saying, hey, we've held off. We haven't pulled the pin on a lot of these companies, but we're going to have to do that because we're not investors. Banks are lenders. So you're going to see corporate insolvencies start to take place. Corporate insolvencies at the moment and bankruptcies are at the low point in the last 8 years. They're at the lowest point. Personal insolvencies and bankruptcies are off the chart. So you're going to see insolvencies among businesses, and probably the hardest hit are going to be the hospitality industry, restaurants, and people in that and retailers for the most part.
Retailers, restaurants, they've been hit, incredibly
Very hard.
Chinese real estate, COVID-19, debt deficits, personal debt, and insolvencies. What's your fifth biggest concern?
What else is there to really to concern yourself about? The Fed in the US is coming out with their announcement later today. So we're sort of concerned about it, but interest rates are likely going to remain pretty stable for the time being, because they're sort of putting off the bad news for the time being. But the first four are good enough.
Are good enough. Mark Borkowski, President, CEO, founder of Mercantile M&A, mid-market M&A firm. If you're looking for someone to give you some advice on selling your business or buying a business, Mark's your guy. Thank you so much for joining us. I appreciate it.
Thank you, Brian.
Well, that's my show for tonight. I'm on every Monday through Friday at 6 p.m. on 960 AM. You can stream me online at www.saga960am.ca. Mark Borkowski, thanks so much. Good night, everyone. Have a great evening.
Thank you. Thank you, Brian.